In and get set up before I start, and I'll get any questions like, hey Steve, I missed the first part of the meeting. So let's do a quick test on the chat, if I may, please. You guys can see my screen. I'll read the risk disclosure. You can hear me okay. Do a sound check. Welcome everyone. Today is the 1st of September, last month of Q3. Markets are levitating enormously, especially tech stocks around the globe, primarily the FANG stocks in the US, which I've actually gotten a bunch of questions on, unrelated to what we do. But if you guys want me to elaborate further, please let me know. Risk disclosure: trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin to utilizing leverage can carry an even higher level of risk and can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets or any of our other software alert products, you should carefully and diligently consider personal investment objectives, level of experience, and risk tolerance. More importantly, maybe most importantly, can you afford to lose the money? So I am a financial advisor based here in SoCal. So anytime you are sharing any results using Alexander Iris Einstein and for new pieces of software that are coming out, please do not use the term company recommended settings. Don't give the litigators out there and all of our different governmental bodies any resume building chances. Auvoria Prime does not have any recommended settings. We're not a financial advisory firm. We just license software. You can direct the software however you want. Have the ability to customize it, and that's what I can help you with. As the risk manager, we have nothing to do with a customer's brokerage account. We don't solicit or take investments. We don't recommend any brokers. Lots of good ones out there, but be very careful when you choose. Go with the ones that the upline and downline has time tested. So we just license software and of the education that comes along with it, including our big time, hopefully soon to be set up onboarding. I get a fair amount of questions surrounding where are the past videos. So let's take a quick look at that. I'm going to switch over to the other screen. If you see the dashboard in the back office here, you can just click on dashboard, choose your product, and this screen will pop up right here. So you can go through the onboarding. You know, a lot of this looks somewhat the same for some of this, but the cool thing is you can go to the different types of recordings for all of, like for instance, the mentorship program, any of the Forex basics, which I would highly recommend. This is Daisy Duncan's, and it's been translated into different languages. So the Forex basics is actually really cool. Goes through this, been through this whole thing. I actually even picked up some nuggets on this. So make sure you guys are sharing this along with the recordings to my past, because there's a lot of things I say that I just probably will never repeat again, especially if you guys are interested in the high volatility settings that we often show, so forth. So let's get out of that. Let's take a look at the Forex counter, see what's going on here in the world. So big news that's dominating outside of just some of these red folder events. Do keep in mind, if you haven't seen anything I've mentioned on my Telegram channel, I would highly subscribe, share the subscription. And we have non-farm payroll this week. So Friday, typically if I'm not of the type of individual to step in front of big news items, I would not be trading Friday morning. Most people are out of the market by then in Forex, regardless of what the software you use is. So these are all what's I talked about a little bit in my weekend notes. One of the new pieces to my weekend notes is just talking about what currencies are breaking out, trying to get everybody a little more in tune to just paying attention, just the very big picture. You don't really need to learn technical analysis with this. So as I switch through a few things here, the Q&A window is open. Please ask your questions in the Q&A window. No need to raise a hand or put questions in the chat box. That way I can X them out as we go through the questions to make sure we get them all addressed, as I often try and do. So other comments? Forex news, really nothing. You guys can always click on this and read about it. It's pretty much all I wanted to say. Let's talk a little bit about the markets here. So we have seen, just going back to the daily charts, you guys can see I was peeling through some stuff. S&P popped out to new highs. For those wondering why I talk about equities, especially the 500 biggest stocks globally at the S&P 500, because this is single-handedly the most looked at index next to the DXY. Now, one thing I do want everybody to notice, this is a daily chart of the DXY. Look what happened this morning. Do you see it? Let's see if I can expand this out and make it a little bit bigger for everybody to see. Notice what happened. So we popped below 92 and we reversed. Same thing with USD. I'm sorry, Euro USD. See that? Popped below and reversed. So now, depending on what's going on, as we have seen a lot, there are some institutions out there that have just been unwilling to take the dollar lower right now. So what does that mean? Well, I could be wrong and we could take it lower tomorrow, right? Or we could spend some more time bouncing around in this tight area, okay? So the DXY has implications for everything. By the way, for that question that I just got on Bitcoin, I don't really chart or follow cryptocurrencies that much. I still consider it to be the Wild West, unless you're buying and purchasing illegal things on the dark web. But looking at this reversal is pretty important. If this plays out, we could run all the way back to the 94 area. Certainly possible. So just keep an eye on that. How does this impact the software if you're using it? So this is a question one should always ask them. Why am I showing this? It has a correlated reason. And this particular one is that we have what could be a reversal back into essentially not ready to break out higher on Euro USD, not ready to break out lower on the DXY. So this could have implications across all currencies. So just make a note of that. How does that affect GBP USD? Same thing, right? It's poked its head above these levels, and now it's reversed. Will it hold? Don't know. Will we go back down inside this range or pound higher? Depends on the next couple of days. If we can break down above these levels, we're more than likely going to visit this 1.302 area, right in this almost just perfect 1.3 area. We're probably going to visit. And that's telling me that a lot of institutions are too short the dollar, or too short, I should say, too interested in going long on both GBP and anything related to the dollar, I guess I should say, right? So, so how does that affect Euro USD or USD JPY? I'll take a look at Euro JPY next. We haven't seen quite the movements. It's been a little quieter in this arena. Again, just looking at daily charts, just paying attention to the macro picture here. All right, so it's pretty much all I wanted to say. I don't really have a lot to say today, so I know that's unusual, but just paying attention to this. GBP NZD, here's the chart again. For those trading this, the Wild West of this currency. Never made it to any large degree in terms of, we spent 6 days, actually 5 days over the 200 EMA. And it just came back down under it. Notice the high volume though the other day. That is of interest. It's a pretty big move. I don't know how accurate these volume things are. I haven't paid that much attention to it in Forex land, these volumes, because I just don't know how accurate they are. I know the trading view, which I've recently been turned on to the last couple of months from some other traders, spends an inordinate amount of money burning in tons of feeds and equity in commodity land. But those are very easy to get, those types of aggregated volumes. It's a little more difficult to get these types of volumes in in Forex, but maybe I can get some clarification from someone on that one. Gold still stuck. I got that question a bunch over this week, so forth. Just unrelated to anything, guys. I just gotta talk about this, okay? So for those of you and many of my clients, stock I was putting a lot of clients in back at $65, $70 a share back in May. It's just absolutely exploded. I mean, we're on a Zoom call right now, and the earnings guidance from these guys was just bananas higher. And this is just popped. So from a risk management standpoint, I'm going to teach you a little bit about risk management on other types of trades. Anything that you've had this type of monster move up on, and this is more than a fourfold return for some of my clients, we've taken off half the position as of this morning. And so I blew out a half this position at every single client's account, including all of my accounts for myself and my family. Why? Because this is just a ridiculous move. And the same can be said for any kind of really nutty move in anything. You want to take some off the table instead of being greedy. Because there's probably a pretty good chance that Zoom's earnings, even though they're absolutely skyrocketing right now, they're going to level off or have a ton of attrition next year when everybody gets back to work, right? So I take that in mind when you're looking at that. But that's pretty much all I had to say. I'll take a quick look at Euro JPY as well. Don't really have much to say. It's sort of still stuck in this tight little formation that it's got towards the stop. This, do keep in mind, albeit a little more sloppy on the daily chart, was another great example, if I draw a line here, of a cup with handle. Okay. So we had the cup formation here, and then we had the handle formation here, albeit not a perfect formation. But you notice when we broke out of this and we came back down against this 124.35 area, came as support. Notice it was also support the next time we came down. So these patterns and the support that they provide, it isn't that hard to look at this stuff, especially on a daily chart, and just read it, right? So we know now if we break below this, we're probably going to visit areas lower, right? Notice every time we've gotten up higher. And the other problem with this particular currency is I think that it's perfectly the tail of the US dollar dog, in being it's the strength of the euro that is mostly just pin actioning off of the weakness of the dollar that is the reason we broke out even to this point. So it's almost like you have the US dollar running what's going on with these two to a certain degree right now. So just keep all this in mind when you're looking at these. If you have any questions, you can certainly ask. Let's take a look at let's see what else. So nothing as far as crypto. I'll tell you though, the crypto question, there is a ton of crypto traders in the forum on TradingView. There's actually some really good people. I've been very impressed at how well this platform has put together a solid group of what they call editors picks, where you have different individuals that will go in and chart stuff. So you can go in and explore that, and there's probably a lot better analysis of crypto than I could ever present. So one of the questions I got was, I'm always stuck in drawdown at the end of the week. What do you suggest in order to be out of the market? James, so you probably should give me a little more detail on that. Are you running Einstein versus Alexander? If you're running Alexander, are you just accepting every single trade that comes through? Are you, awake, essentially accepting all those trades, or do you just delete them when you get up? Stuff like that. Do keep in mind, for anybody that's fairly new to this call, we have four new pieces of software that are coming out. The VPS, by our large VPS, which is the virtual private server. It's basically a computer somewhere else in the world. It's not on your desktop, that runs these EAs in the MT4 platform. They have finished their coding, which seems like it could have been done a long time ago, but so be it. Everybody always uses some reason that COVID exists to be some excuses to why they can't get something done. maybe that's theirs. But in any case, it's finished. So we're looking to now implement, from what I understand, variable first, which has had a monster last 11 months. So if anybody wants me to go through some of the variable MyFX book links, I have a couple more coming, but I have a few that I can share now as well. So just let me know if you want to spend some time on that. So Einstein is taking every trade for you. I don't know what your settings look like. Let's go into, so let me switch over to the other instance here so we can take a look at our main account. I have so many VPSs hooked up here. All right, so this is the main ring that we trade, guys. And we trade on the conservative settings. This is 0.01 per 3K in terms of starting lot size. I do keep in mind, everything's always trailing equity. I very rarely have fixed weekly goal. Why? Because once you get a performance in some sort of return for the week, with the volatile nature of these markets over the last 6 months, because we've been in all sort of just absolutely crazy market positions, it's just more conservative to be trailing equity. That's where I choose. Remember, we traded the stop loss to 500 pips, and we switched the settings out of the box to the ones you see here on the screen. So these is called high volatility settings. The other cool thing, by the way, about Variable and some of the other softwares coming out is there's not going to be any settings to mess with you guys. So, I mean, this is going to be a lot easier for me showing the other software because we're not changing and messing around with settings. I mean, Gearbox has a lot of settings. It's actually going to require a lot more time on that, but that's not something I'll be handling. Tyler's going to be running that baby himself. So there's a fair amount of getting up to speed, but Gearbox has done well. Hell, all four of them have done great. The problem I think that has arisen is that there's just so many facets to how Einstein and Alexander can run. Even though we have a super deep bench of very smart individuals, hats off to David Mays in Europe, the settings and all of the different parameters that we've used to set up, of which I've sort of come in as, you know, like it's like coming in as a leader, not having spent the time in the trenches with a lot of these settings. So, you know, and maybe that's just my own fault. I have 2 other businesses to run. So does my wife. But plus we get 2 kids. They're being homeschooled now, unfortunately, which totally stinks. So, but the timing's has been difficult. So I have been real thankful to a lot of the global leaders and just some super smart individuals. And I don't make that statement lightly, as you guys may know, that have just put some tremendous time into getting this done. All of our developers, our global directors, our R&D guys, you know, I mean, hats off to everybody that's just put tons of time in. So for those of you, I understand the impatience because I get these emails. It's better that we get this right now than release it half-assed and have things go awry like it did with some of the settings that we had in the early days of Einstein. So, I mean, I guess I can take some credit for, you know, not having everybody positioned correctly from a risk manager standpoint. But the vast majority of the situations that we came across, all the one-offs we asked for more information on, all the settings were wrong. So they weren't paying attention to my calls. Their up or down lines did not give them correct settings. They were running with something crazy like a 1-minute time frame instead of the dailies in terms of chart times that you see on my screens. So I implore everybody on this call to make sure your teams are, if they're trading, you know, Alexander Einstein, you know, watch these calls. Eventually we'll be moving into talking about other pieces of software. And then we get everything totally dialed in. My sincere hope is to just come in on Tuesdays and Saturdays, talk about the markets, potential, you know, major events, news, run through some quick technical analysis on stuff, and then talk about risk management. I mean, that genuinely is the goal I want to get to at some point. So let's get off my soapbox and answer some questions. So I get a lot of questions that sound like this. It's hard to get out of drawdown if you trade both long and short lately. That is true, and it depends on the currency. Because keep in mind that many of these currencies, albeit not in the immediate near term, but have had gotten into some big trend areas. I mean, most of them have just somewhat cooled out, and we're stuck in a tight range, as what I like to call a balancing of a tight range between points. But many of them have broken out of significant chart patterns in the short and long term, and that always wreaks havoc on a martingale-based trading system, which is primarily what Einstein and Alexander do. You know, they take trades that are way out, in some cases, very, very heavy, in order to, for lack of a better term, in order to, I don't know, look for the snapback of the rubber band, right? That's essentially what, and I would encourage everybody, because this is a real long definition, you can actually Google martingale and see what a martingale trading system looks like. But some of the other ones coming out, they don't take that. Some are more trend following. Some are just go anywhere. You know, they can readapt to a change in trend or anything like that. And really, that's what you're kind of looking for. But most of the questions I get surround, hey, how can I step in front of the software and be smarter than it? Should I turn off the longs? Should I turn off the shorts? And I say the answer to that is only if the currency pair that you're trading is breaking out of some significant move. What is that significant move, Steve? Well, then that does require, if you want to have a fighting chance, especially with Alexander, pay attention to my calls and learn a little bit about technical analysis that will help you in the long term, especially if you want to make this a career and or just a side business. You know, just keep in mind, if this is done correctly, this can be an exceptionally profitable side business. And there are many people that I have as friends out in the markets that had a regular job, dove in, started trading, and obviously they were more manual trading than some of the more semi-automated programs we offer. But they went out, did exceptionally well, and many of them have quit their jobs and become full-time traders. So implementing some manual trading, some have implemented our strategies as well for part of their accounts. You know, so you have sort of a diversification of different trading strategies. And this is our whole argument at Auvoria about long term. We want to make sure that we have a deep bench, a deep product breadth, if you will, to offer different types of EAs to our subscribers. We will be one of the only companies on this planet organized in this fashion to do this. And that's what's super exciting about all this, even though I'm not the super excitable guy. So, unless somebody brings me the holy grail of trading systems. Right now, there's only about 6 hedge funds on the planet that have that. But in any case, yeah, so let's take a look at some of my new links. Now, I'm going to caution everybody on this. I don't want anybody running around to their up and down lines and spending all of their time sharing these performance numbers, okay? Why? Because this business, as you guys know, I'm not a multi-level marketer, but this business is built on relationships. And if you don't have the relationship in place, regardless of the performance, once things get a little tough, and they will eventually down the road, happens in every line of trading, you won't have that solid relationship. So I think that's important. But let's take a look at variable. Okay, so this is variable. We have a number of other links I'll be sharing. This has been running live and demo money for almost a year now. The drawdown on this has been minimal. As you can see, we had periods, and this was during crazy times in this pandemic, but most of the drawdowns are right around 12%, 5. This thing has had, if you take a look at history, by the way, if you don't know what this is, guys, this is myfxbook.com. This is where you can actually hook, and I highly suggest everybody do this, your accounts up to an analysis system that can't be messed with. You can't be effed with. This stuff is real, okay? Whether it's the most important thing is that the track record verified is real. This trading privileges one sort of gets me. I got some that it's still an X there, even though we've tried to implement some of our top coder guys. We've had some problems with it, but whatever. So the point is, this is a verified track record. Whether you're using demo or live money, it just depends on what we're showing. But the win rates on this, surprisingly enough, you'd think that the win rates would be higher, right? That's because this stuff cuts its losses pretty quick. Now, in all fairness, if you take a look at the history, you can always sort by profit. Keep in mind, this is a USD denominated account. You can see some of the worst losses, right? In terms of both pips and profit. Now, I want you to compare that to some of the best, right? See the difference? It's cutting the losses almost 2/3 less than it's letting the wins run, okay? Now, there was a couple of trades that this software caught the love of the pandemic run, if you will, and one trade alone had almost a 30%. But even if you took that out, these small percentage of gains, then movements in terms of profits have added up to just a tremendous return on this software, okay? So here's the big run. Okay, but the consistency of the performance in 2019 to now, I mean, this is just enviable type performance, guys. Really is. So forth. So we had a lot of 5% and 5%. Looks like it was up 20. And it had periods of time where it was running 10 and 20, so forth. But this is actually pretty good stuff. So, I mean, I'll look forward to I'm going to hook this up to a big chunk of money I have live and one of my Forex brokers, and then to see how I'm also going to set it up in demo form, which I suggest everybody do first from a risk standpoint so that you understand, what's going on. Pay attention to the drawdowns, pay attention to all of the different things. You can see how the balance has grown, but essentially the account was started with $1,000. It's up to a little under 12K. The other thing that is a very important note through this entire period of time is that this is still running a 0.01 trade size. And that's what just makes this bananas, because it wasn't changed. So as the account grew in size, I more than likely would have moved this to a 0.02 minimum trade lot start when it got to 5K. All right, so just do some questions here. Now, one of the other EAs, and the question is, Steve, I'd love your opinion on them. Again, just keep this in mind, guys. I didn't develop any of these 4 softwares, right? I'm sort of coming in like the ivory tower guy at the top, just looking over this and making an assessment from an institutional perspective, which is what I've been essentially brought to the table to do at this company. I haven't seen the depth of the other 4. I know one of the other 4 just trades the Singapore dollar, so it is very specific. But I do know that the numbers have been great. I essentially, in the argument of diversification, if one can sort of do this, I would have 2, maybe 3 products subscribed to. Yes, it's going to cost more money, but they've done very well. So I wouldn't argue about the cost. Obviously, we're going to give, some sort of multi-subscription discounts. But that's ideally, in a perfect world, what I'm going to be doing. And running different pieces on different chunks of risk-only capital. Now, one thing I do want everybody, because I'm seeing this question show up, and I had a feeling this was going to come up, and no fault to anybody out there, but please do not tell anybody in your up or down line that this is a set it and forget it software, because it's not. There's going to be periods of time where it's still important to pay attention to my calls. And I do not want to hear anybody saying that on any call anywhere. And I'll tell you this, maybe I'll be Mariska in compliance here. If anybody's out there doing this, please somebody let me know, because I don't want this to be talked about in this fashion, right? Because what if there comes a time when we got to make adjustments to some of the settings in the software and nobody's paying attention to these calls? Just keep that in mind. So if you're in drawdown, Cyrus, it will carry to the following week. The software, and I assume we're talking about Alexander Einstein here with this question, it will just allow itself to get out of drawdown. And you can use an example of this, by the way. Look at Variable. Yeah, I mean, the account got into drawdown a couple of times, but it pulled itself out pretty quick. But in some cases, it did take some time, right? So it got down a little bit, and then boom, it came right back out. So it's been a little quicker to act, obviously, in a different fashion than it would with this. And I forgot to show the trade summary screen, by the way. So you can see this is running now 4. You can choose the ones that you want to run. Okay. Notice we got Aussie USD in here. But other than that, you guys know all these other majors because I talk about them all the time. But interesting, the profit factor, the biggest has obviously been the most liquid. So essentially, the least amount of trades you would think it has, but the movements have been much greater. So look at look at how many trades it's taken for the profit that it's earned. And think about that from a risk standpoint. So you've had to have almost twice, maybe not as twice, but a little less than twice as many GBP trades to get 1/3 less profit. Is that right? There's all kinds of ways you can dice this up. We'll release this to everybody a little bit further down the road. I don't know, maybe these FX books are already floating around. I don't know if they are or not. I guess they are among some of the global directors, but I would just caution everybody that it's done exceptionally well, but don't go talking about this performance as the only reason for somebody to come aboard. Talk about the education. Hell, you could talk about Steve in my weekly calls, right? All right, so let me just go through some more questions here. Bear with me. Okay, here's a question. When running trailing equity, let me jump back here. Okay, so it's trailing equity. Here we're back talking about Einstein. When running trailing equity, it will close out all trades, negative and positive, and possibly close you out in a lose for the week. There's a yes and no answer to that question. If it is regardless of trailing equity or fixed weekly goal, you will find that the software will take some trades, it will take some heat on some trades, and it will keep that heat on. Meaning that there will be trades that, we've had some of the most extraordinary market environments the last 6 months to test this out in, right? Much more volatile than previous years. So that's one reason we removed the lower stop loss, made 500 pips higher. Essentially, the account can take more heat. Why? Because we found that if it takes more heat, it has more of a chance to pull itself out. Just keep in mind when you're in those 6th, 7th, and 8th level trades in the sequence, those trades are getting put on are extraordinarily large in size. And when they snap back, they can completely clear out all of the 6 trade levels below it. I've seen it happen a lot. But unfortunately, in this volatile environment, hence the high volatility settings, you've got to cast a wider net for the software to operate in. I don't know if that makes sense or not. But because I get so many questions about, should I step in front of the software and close it out? What if I said yes to that and you did? And those trades totally came back, right? You'd be like, hey, Steve, why the hell did you tell me to turn it off? I think totally would have gotten me out of drawdown. Like we've seen it happen. In case this has taken a while. And that's just unfortunately the current climate. Many of these charts, if we go back to the Euro USD, just as a perfect example, we haven't seen the June levels that some of these losses created. Will we now again? I could tell you if we came back down into this area, I would be quite surprised. But the market tends a tendency to bring the surprise type moves, right? So maybe that wouldn't be surprised, but this would give a lot of those trades that are still sitting on the system for some that are in drawdown, they'll all be closed out at either a much lower loss or potentially a profit, especially the heat that it took up here, get back down to this level. Hell, it may take another 2 months, but eventually it's pulled out and it's recouped some of those losses. That answers your question. Yes, so let me just jump back here. So trailing equity, to answer your question, Friday is the closeout day. I do that because you could set this to Wednesday if you want. I don't know that this is this important, honestly. I'd rather give it a fighting chance because it's already up, right? So if you go up 2% and you've got a 1% trail equity buy, I like to say the security guard's been woken up in your account and he's now protecting it from falling below 1%. If we had Wednesday and you were up 2%, fell down 1%, and it was, Wednesday and it closes you out, then it kind of maybe answers some of your question. You don't have as much of an opportunity. You get 2 more days. What if things turned around on Thursday and Friday? See my point? And you went up 4% in the account after you dropped back to 1.5. See, the point is you're just giving the software with a Friday parameter on trailing. You're just giving it more opportunity to pull out a higher return. If that makes any sense. And if you're confused, let me know. I can try and explain it a different way. Yeah, so just as Jeanette said here, I think I got to bring Jeanette on bring you on as a special guest, right? She knows her stuff. Says, so true. Software will bring you out of drawdown. Just make sure you have money in the account to sustain the drawdown for a while, right? Or you have a stop loss that is granting you more latitude. I got the question the other day, well, why on earth, Steve, would you change the stop loss to 500 instead of keeping it at 250? Well, if you take a look at most of the trades, and I'm not going to go through them right now, but if you take a look at most of the heat these accounts, both Einstein and Alexander have taken, it's blown you right out at around about 250 to 300 pips, and then it's completely reversed. So essentially, if you had kept the trades on in drawdown and just granted it a higher stop loss, some of those pretty vicious snapbacks would have taken you out of drawdown faster. All right. What else do we got? A lot of questions today. All right. So that's it for Einstein discussion. If anybody wants to talk more about the 3-ring, I'm going to kind of wind it up early here. I don't know, it was 42 minutes early. So anybody else got any questions? My email is svettorel, VETTOREL, at auvoriaprime.com. I am your CMA. Feel free to send me an email. But if you do send me an email, make sure you have a verified FX book link that you can show me. That way I can see what's going on, obviously. And make sure you send a snapshot of the settings window and a good, solid description of what's going on. Other than that, 1st of September, make it a great month. Remember what I said? Don't go be sorting all those great variable performance numbers. Don't start all your conversations off with your affiliate peeps. Use a relationship, I think, is probably the best way to build the downline. Have a great weekend, guys. See you Saturday morning.